The Marubozu candlestick pattern. If you know how to trade the Marubozu candlestick pattern, then you must have felt the power of this trading strategy in generating big profits in both the forex, stock and crypto markets. But if you haven't mastered the Marubozu candlestick trading strategy well, then in this video I will show you the Marubozu candlestick pattern trading strategy, which of course will give you additional weapons to beat the market. So, without further ado, let's get started. A Marubozu candlestick is easily recognizable by its distinctive characteristics. It is defined by its high open or close price, distinguishing it from other candlestick patterns. Unlike traditional candlesticks, the Marubozu lacks wicks or shadows on either side, indicating that the highest or lowest trading point occurred at the end of the candle. In a full Marubozu scenario, both bullish and bearish candlesticks are characterized by either having very small wicks or even lacking wicks altogether. This absence or minimal presence of wicks is a key feature of the full Marubozu pattern. It signifies that throughout the trading period, whether the price experienced a significant upward rally or a notable downward movement, there were minimal to no retracements or fluctuations. As a result, the candlesticks close at their extremes, without any indication of high and low points before the candles closed. This reinforces the strength and dominance of the market trend during that specific time frame, providing valuable insights for traders analyzing price action. A Marubozu open occurs when the opening of either a bullish or bearish candlestick is characterized by a flat appearance, with no wicks present. However, it's important to note that while the opening lacks wicks, the closing of the candlestick may still include wicks. This means that although the price may have fluctuated throughout the trading period, ultimately closing with some retracement, the opening of the candlestick itself was steady without any significant deviations. This pattern suggests a strong and decisive start to the trading period, setting the tone for potential price movements ahead. Conversely, a Marubozu close is identified when both bullish and bearish candlesticks exhibit flat closing levels, with no wicks present at the close. However, unlike the opening, the candlestick's opening levels may show the presence of wicks. This means that while the price may have fluctuated during the trading period, ultimately closing without significant deviation from the opening price, the opening itself may have experienced some fluctuations or retracements. This pattern suggests a strong and decisive end to the trading period, indicating potential continuation or reversal of the prevailing trend in the market. The Marubozu candlestick exhibits several distinct characteristics that make it easily identifiable. First, large body. The Marubozu candlestick typically has a significant body relative to its overall size. Second, lack of shadows. There are no shadows or wicks on either side of the candlestick body. Or if there is a shadow or wick on the Marubozu candlestick, then the shadow or wick is relatively very small. Third, color indication. The color of the candlestick body can signal the likely direction of price movement, with bullish Marubozu candles indicating upward movement and bearish Marubozu candles signaling downward movement. The absence of wicks in Marubozu candlesticks signifies that the price opened either at the high or low of the session and closed at a significantly higher or lower price, respectively, without experiencing any pullbacks. These characteristics provide valuable analytical insights into the future direction of price action, particularly in relation to the prevailing trend. Marubozu patterns indicate a strong directional trend without encountering resistance. For example, in a Marubozu open, the price opens without retracing and continues to surge to new highs throughout the period under consideration. This unidirectional movement confirms robust momentum in that direction. This strong trend behavior applies equally to both Marubozu open and Marubozu close patterns. Despite the presence of small wicks at the open or close, the price maintains a steady movement in one direction, ultimately closing at a higher low point without encountering any significant price rejection. Bullish Marubozu. The bullish Marubozu candlestick pattern occurs in financial markets when a trading session opens at the lowest point of the day and closes at the highest point. This indicates strong buying pressure throughout the session. In essence, the price never goes down, or if it does go down, then the drop is very small below the opening level and ends at the top of that day's trading range, or if there is a decline at the close, then the drop is very small. This indicates significant bullish sentiment because there is no downward price movement after reaching its highest point. Interpretation. The bullish Marubozu signifies an intense interest from buyers in purchasing the security, as they eagerly buy at every price level offered by the market. Throughout the rising price trend, buyers persistently engage in purchasing activity, even at the day's highest price, resulting in the market closing at its peak. This strong and active buyer behavior indicates a prevailing bullish sentiment, suggesting a high likelihood of continued bullish momentum over the next few trading sessions. Trade example. Now, let's explore how to execute a trade using this pattern. In the provided daily timeframe chart, the highlighted candle represents a bullish Marubozu formation. Recognizing the bullish signal indicated by this pattern, we could anticipate a probable upward movement in the market. Consequently, we might have decided to initiate a buy position. Reviewing the outcome of this trade, we observed that the market remained bullish for the subsequent 3 trading sessions, confirming the effectiveness of our decision based on the bullish Marubozu pattern. Furthermore, on this chart, you can identify at least 4 bullish Marubozu candles, all leading to increasing prices. This serves as evidence that the Marubozu pattern is highly profitable for trading. In this video, I will demonstrate to you the most advantageous method of trading the Marubozu pattern, whether in forex, stocks, or crypto markets. Bearish Marubozu. Understanding the bearish Marubozu pattern. The bearish Marubozu candlestick pattern occurs in financial markets when a trading session opens at the highest point of the day and closes at the lowest point. This indicates strong selling pressure throughout the session. The point is that the price never rises, or if it does rise, then the increase is very small above the opening level and ends at the bottom of the day's trading range, or if there is an increase at the close, then the increase is very small. This indicates significant bearish sentiment because there is no upward price movement after reaching its lowest point. So, what does this tell us? It means that right now, most traders are feeling negative about the market, and this negative feeling might stick around for a few days of trading. Trade example. This is the daily timeframe chart. A bearish Marubozu candle is formed as represented within the circle marked. This indicates that the seller pressure is coming in, and the market is preparing to go down. Therefore, we can anticipate going short around the low price of the day. Just like with the bullish Marubozu we talked about earlier, deciding when to enter a trade with a bearish Marubozu depends on your trading style. If you're an aggressive trader, you might jump in for a sell while the candle is still forming, showing that downward momentum. On the other hand, if you're more cautious, you might wait until the next candle to go short, just to be sure. Regardless of your approach, setting a stop loss is crucial. For both aggressive and conservative traders, it's wise to place the stop loss above the highest price of the bearish Marubozu day. This helps protect your investment if the market unexpectedly turns against your trade. MA-RSI Marubozu Trading Strategy. The MA-RSI Marubozu trading strategy utilizes 2 indicators: the linear weighted moving average, LWMA, and the relative strength index, RSI. As previously discussed, the Marubozu candlestick pattern indicates a strong one-directional movement in the market, with a high probability of the trend continuing. Traders utilize the Marubozu signal to maximize trading profits by entering the market based on Marubozu signals that align with the short-term trend indicated by the LWMA indicator and the momentum indicated by the RSI indicator. Since the Marubozu candlestick pattern signifies a short-term trend, traders also employ short-term settings for the moving average and RSI indicators, typically using a 14-period LWMA and a 14-period RSI. Additional indicators are not necessary because the trading signals from the Marubozu candlestick pattern are highly reliable. Moreover, by relying on just 2 indicators, traders can maintain simplicity and clarity in their trading approach. And now, by examining these examples, traders can gain insights into how to identify and capitalize on Marubozu candlestick patterns within the context of the MA-RSI strategy. This hands-on approach enables traders to develop confidence in implementing the strategy effectively in various market conditions, ultimately enhancing their overall trading success. Buying rules or long setups. First, the 14-period LWMA line is sloping upwards, indicating a bullish trend in the market. Traders should not look for Marubozu pattern signals if the 14-period LWMA line is flat, as it suggests that the market trend has not yet formed. Second, the 14-period RSI line is above the 50 level. This serves as an important confirmation that the market trend is indeed bullish. These 2 conditions are more than enough to provide strong reasons that if a trader finds a bullish Marubozu candlestick pattern, the bullish trend is likely to remain strong for some time. Third, if a bullish Marubozu candlestick pattern forms, traders should immediately open a buy position at the close of that Marubozu candle, or at the opening of the next candle. Fourth, because this trading signal is very strong, traders can place a stop loss below the 14-period LWMA line, or below the low of the Bullish Marubozu candle. Traders can choose the smallest stop loss to maximize profit. Selling rules or short setups. First, the 14-period LWMA line is sloping downwards, indicating a bearish trend in the market. As mentioned earlier, traders should not seek Marubozu pattern signals if the 14-period LWMA line is flat, as it indicates that the market trend has not yet formed. Second, the 14-period RSI line is below the 50 level. This serves as an important confirmation that the market trend is indeed bearish. These two conditions are more than enough to provide strong reasons that if a trader finds a bearish Marubozu candlestick pattern, the bearish trend is likely to remain strong for some time. Third, if a bearish Marubozu candlestick pattern forms, traders should immediately open a sell position at the close of that Marubozu candle, or at the opening of the next candle. Fourth, because this trading signal is very strong, traders can place a stop loss above the 14-period LWMA line, or above the high of the bearish Marubozu candle. Traders can choose the smallest stop loss to maximize profit. As you've seen in these examples, it's evident that Marubozu is a highly accurate candlestick pattern that can be relied upon by all traders, whether beginners or seasoned professionals. In fact, these indicator settings are quite dependable, even if you encounter price action signals other than the Marubozu pattern. This means you can also utilize the MA-RSI settings as an analytical tool when identifying other high-probability price action patterns, such as the pin bar pattern and engulfing pattern. Of course, you can customize these settings on your trading platform because these indicators are available on all trading platforms. This flexibility allows traders to tailor their analyses to their preferences and trading strategies, enhancing their ability to make informed trading decisions. Or if you want to have the exact settings as shown in this video, you can download them in the description. In this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so you don't have to worry about anything. Get the download link in the description. Here are additional examples of the MA-RSI Marubozu trading strategy to provide a comprehensive understanding of this effective approach and to help traders maximize its benefits. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and share this video across your WhatsApp, Facebook accounts, or X to show your support. See you next time.